Let's talk about building one of the most important businesses in the world, which is your family banking business. Now, this requires a paradigm shift in the way that you think. And this is why this book, Becoming Your Own Banker, has been so impactful for so many of us, because it encourages us to stop and just think about what's going on. And when you can change the way you look at things, the things you look at change. And so a lot of people are constantly looking for deals. I don't feel like I have enough deals coming across my table, so they're constantly looking for investments. And this is where the banking conversation is so different, because the deals are sitting right in front of you. You just don't see them because you're thinking like most other people. Now, the banks understand this flow of money that I'm going to be talking about, and they hate that we are having this conversation right now. Because the way they look at our children and us for something like vehicles, which is something we all have to participate and purchase in our lifetime, they look at us as future and current cash flow sources. And so when you start building your own family banking system, your paradigm will shift and you'll start looking at your kids as a place to grow a relationship that you can actually capture and control that cash flow for vehicles that they are going to finance. And so when our kids are growing up, they're very dependent on mom and dad for everything. So let's assume we got this family with 3 kiddos. And as they're growing up, they are very dependent, especially financially, on mom and dad. They need us for everything. And eventually, they grow up, they move out, maybe they go to college, they get married, whatever it is, but they become independent of mom and dad. Now, this is a very proud moment in our culture. You know, when you can feel like, I don't need mom and dad anymore, I can go get my own financing, I'm going to get my own mortgage, vehicles, whatever it is, I'm going to be independent. And this is, like I said, a proud moment in our culture, but this is when the banks capitalize on that. And they move into that position and they start growing a relationship with your child because they want to be the person financing those things that our children need. And if you watch the video prior to this about the average person will drive 13 vehicles in their lifetime and spend roughly $400,000 doing it, the way you need to look at this is this $400,000, this is not a if, this is a when. Everyone has to have vehicles. And this $400,000 is cash flow. These are deals for every one of the kids. Now, the banks know this, which is why they try to capitalize on these relationships so that when the kids move out and they become independent, now these cash flow sources from these vehicles are made between the bank and our children, okay? This is where the flow of money is now. The banks have capitalized on that. And we think nothing of this. This is totally normal. Now, if you think about that, each one of your kids is worth $400,000 of cash flow. That money will come into their hands and leave their hands for just vehicles. And so you have to ask yourself, do you want to get into the family banking business and bring your family circle and your financial circle together and grow a different type of relationship with your children to actually bring them closer to you as parents and grow a stronger relationship that can be centered around money as well? And what I'm referring to is instead of having an independent relationship, we're going to use the term that I love from Stephen Covey called interdependent. And what this means now, if you have an interdependent relationship, we actually get to cut these big banks out of this equation. We're going to separate them from that control of money. And we are now going to tie into the family banking system and work interdependently as a family unit. So now this flow of money can stay here. Now, when we take a step back, you realize how simple this is. All we did is change one thing. Now, money is a taboo subject in most people's homes. And we're looking to really change that. It's going to take many, many years, decades, if not more, to change some of these paradigms around money and family relationships. It all starts with education. It starts with trust. It starts with good contracts in place, ongoing family meetings. So there's a whole curriculum around this that will coach you and educate you on. You don't just start lending money to family. You've got to take the time to build a relationship around money and your family so everyone understands what's going on. Now, if we just take a step back, let's just study the banks and let's go do the exact same thing they're doing just for our family. So one thing that we know about banks down here at the bottom is that they keep a lot of cash reserves in a very uncommon savings environment, which is whole life insurance. And so these numbers down here represent how much these banks have in cash values inside their insurance policies. So what does that tell us? Well, if we want to go build our own banking system, we need to capitalize some money in our own accounts, our own policies as parents. Mom and dad need to build up a family banking business, have enough cash in your policies so that your kids can come borrow from you instead of a bank. They can pay you the cash flow instead of a bank. Now, by doing this, you will control this flow of money now, and you'll eliminate this flow of money from the banks. And we get to do it in an environment that is completely certain because the asset we're using is a whole life insurance policy, which has actual guarantees in it. But your kids are 100% certainly going to buy vehicles. This is not an if, this is a when. These deals, this cash flow is sitting right in front of you right now. You just don't see it because of the way you think. And this ultimately leads to a lot more cash flow for your family. Now, how much cash flow? Well, there's a couple different ways you could look at this. So each child, statistically, is going to drive 13 vehicles in their lifetime and spend about $400,000, which means each one of your children is going to spend $400,000 on those vehicles. That's the cash that you can direct back to you and your spouse for just one child. So you take that times 3, that's $1.2 million of cash flow that's sitting there for just vehicles. Now, if you are taking that $400,000 over a lifetime of a child, they're going to drive all these vehicles, and those dollars are flowing back to your banking system, which is an insurance policy. The interest cost over here on the right, through the compounding environment of that policy, would yield about $1.5 million. Now, if you watched the video just prior to this one, you saw that quick video on how that's possible. What's happening inside the compounding of the policy to have it yield this much growth over one lifetime. And so really what you need to do is you need to start looking at your children as this, each one of our children is worth $1.5 million to us. Okay, so for a family of 3, there's $4.5 million of interest costs that's going to leave your family forever if you don't capitalize on this, if you don't become a family banking business and start redirecting this flow of money. Now, what happens if each one of your kids get married? Okay, so now you can times this by 2, this by 2, and this by 2. So instead of being $4.5 million of interest cost for a family of 3, if your kids get married and now they're financing 2 vehicles, well, you would just double those numbers. And so now you're up to about $9 million of lost interest cost just for vehicles by not doing this. You see, and this is why I said Bank of America, Chase, and Wells Fargo, they hate that we're having this conversation right now, because once you see this, you will never be able to unsee it. People are searching for businesses, for investments, when they have millions and millions of dollars for just vehicles in the form of cash flow that has to happen. It's sitting right in front of you, and until you change your thinking, you'll never be able to see it. Now, this gives you such a unique opportunity as a parent to sit down with your children, to coach them, educate them, be a good steward on good money habits, saving, growing relationships that are built on trust, good contracts, good faith, that they can tie into you, and they'll actually come to you as a parent in time of need instead of keeping those relationships separate. And so I've seen this transform my own family. We are much closer as a family because of money than we were prior. It's built trust. It's built stronger relationships. We keep more cash flow in the family for things like vehicles. The Fuller family banking business, we will never lose out on a vehicle that a member of the family will finance. That money always stays here. And a question that we get asked is, well, why would my kids want to borrow from me and pay me interest if they could go get, a loan at Chase Bank for 3% and I was going to charge them 6 or 7? It's a great point. You see, one of the unique things about this is that we're using a life insurance policy, and these life insurance policies have death benefit built into them. So whatever my kids borrow from me and use for financing, in this case we're just showing vehicles, but it could be mortgages, college education, business startup capital, you name it. Whatever they've borrowed from me, when my wife and I pass away, they're going to get 100% of those dollars back, principal and interest, tax-free, plus about 10 times what they put in, because that death benefit is so large at that point. So on the video right after this, you're going to see that multi-generational wealth transfer. And this is exactly why your kids are going to want to pay you more interest than they would a bank, because you're going to make them a deal that says if you use us instead of the other banks, we have a chance now to grow a relationship, but we can also transfer the wealth from generation to generation. So everything you pay into the system, you'll get back on a tax-free basis. You see, a bank would never offer you that deal. Imagine if you walked in a Chase Bank and they said, we're running a special right now. We want to grow a relationship with you. If you just borrow from us for your vehicles, in 60 years, we'll return 100% of those payments, principal and interest, tax-free to you at that time. You see, if they offered stuff like that, more people would be inclined to use them. But they're not relationship-based like that. Banks are only interested in you as a number. They don't look at us as people. They look at you as a number. Hence our slogan, Beat the Banks. We're here to coach you and educate you on how to think like a banker. And as soon as you do, your entire money paradigm and reality changes, because suddenly you're thinking not like a business owner or an investor or a consumer. Now you're thinking like a banker. And this is one of the reasons why the banks are some of the largest and wealthiest companies in the world, because their thinking is very different, very uncommon than most people.